Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me remotely is Phil Mackintosh, who's the chief economist at Nasdaq, to review how policymakers and investors are starting to model out the global economic impact of the coronavirus as the race is on to mitigate the spread and provide stability to the markets, consumers, and the economy. Now, Phil, stocks have certainly taken a breather after 3 days of a historic rally rather than due to any new news. Clearly, all the news is COVID related, but it really is not positive, and we can see that in our first slide here with, it's really the worst place to be is the US right now.
Yeah, the news overnight's not really that great. It's mostly COVID update news, and it's the fact that there's continuation of caseload growth. The US has more cases now than China. Italy actually had an uptick in its cases as well. So I guess net, the new news is that at the moment the virus is winning, and the lockdowns have not quite kicked in yet.
Yeah, and if we take a look at our first chart here, we're starting to see the impacts of lockdowns and distancing in our economic data, and this is just week one of it.
Yeah, the initial jobless claims looks horrible, and I guess it is, but it's not unexpected. And I think that was the important thing, because this actually came out yesterday before the market really got going, and we still rallied through this amount of news because everybody's aware that the restaurants are closed and the airlines have kind of shut down their planes, and a lot of people just can't get to work or aren't allowed to go to work. It was fully expected that we would have a pretty bad initial jobless claims, and a lot of the estimates were 2 to 4 billion, and it came in right just above 3 million. Sorry. So it's not like it's unexpected, although you can see it's off the charts. I mean, we have never had a recession that's created this rapid an increase in jobless claims. This is an unusual way to treat an economy, and I think that's one of the reasons why there's so much uncertainty. Is we're not quite sure whether people will get back to work. When they do get back to work, how quickly they'll spend, whether the jobs will be held open for them. There's a lot of unknowns because we haven't really done this, at least not in the last 100 years.
Right, and those are the two biggest questions out there right now. When can we return to work safely? How quickly will spending and confidence return? And as we look at our next chart here, we can see that GDP for the second quarter, the revisions there show a contraction.
Yeah, and a lot of the revisions here have come in pretty quickly too. So there's a lot of economists now forecasting a recession. I think it's generally accepted we will have a recession. Some people have even used the depression word. And the problem is, we've seen from China that there was a massive reduction in their output, which is obviously GDP. People aren't working. A lot of people are told to stay home. So the output for that quarter is going to be down significantly. The question is what happens the quarter after. And so that's really where, if we are able to go back to work, if we want to go back to work and we want to get back on planes, then things should recover pretty quickly. If we go back a little early and no one's actually that confident to be around each other, even though we're told to go back to work, a lot of people might not be fully involved or fully invested in the spending and being back to normal, because we're all human and we don't want to put ourselves at risk. So it's going to be a really fine balance between the economic cost of getting back too quickly or the economic cost of sitting out too long. But at the same time, we don't want to have ongoing cases and uncertainty, because that'll affect the consumer just as much as getting back too early.
Yeah, I would agree with you, Phil. And we're not even there yet. We're still in the mitigation phase, but we always like to end this on a positive note. In our final chart here, we can see that's what China is experiencing right now. It seems as if that they're kind of getting back to normal when it comes to economic output.
Yeah, this is probably the most positive chart I've seen of the China getting back to normal rate, because it still shows it took them 6 weeks to go from things starting to recover to close to 100% of capacity. There's other data coming out of China that doesn't show quite the same thing, though. You can still see people aren't that comfortable getting on subways, getting on trains, getting on airplanes. Those kinds of spending are still down significantly, whether that's 50% or more below normal. So that's kind of what we've been talking about, is even if you can get the factories back up and running, do people, for China's perspective, do people still demand their products? Because right now the rest of us aren't spending much money. But once we all get back online, how long will it be until we want to spend money on the things that put us close to people and sort of get over the fact that there's risk of social contact?
Yeah. All right. Thanks so much for everything this week, Phil. Have a great weekend.
You too.
All right. And thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.